You might be thinking that researching a stock is very long and boring process. Well, not anymore. With cutting-edge AI tools, we can increase our productivity and make a stock analysis much more efficient. If you are new to the channel, my name is Andrew. I started investing in 2020, and before I spent days and weeks researching the company. But now the game has absolutely changed, and in this video I will share 7 simple steps to follow to research the company to invest and hopefully outperform the market. With you smashing that like button, let's begin. What's going on, investors? Hopefully guys are doing well out there. Welcome back to another video, and today we are talking about how to research a company. The step number 1, understanding the business. Peter Lynch, one of the greatest investors of all time, sharing why it's very important to know what you own.
The single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say, the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it.
When I started investing in 2020, what I would do is go to investor relation page, I download the annual report, I download latest quarterly report. Some of the annual reports are more than 100 or 200 pages. I would go through the report, read about the business, what company does, analyze the business segments, search for keywords in the report, for example, inflation, pricing power, recession, stuff like this. And now AI totally changed the game, and what I'm doing in 2025, let me share with you. Now I would download 5 latest annual reports, 10K, 4 latest quarterly reports, 10Q, company presentation, some press releases and latest news, and I would upload all this in notebooklm. Notebooklm is a tool developed by Google to leverage the cutting-edge AI to allow you to upload the sources into the notebooklm, and then you can just ask simple questions and the model will reply based on the source you uploaded. In that case, you absolutely make sure that this information is accurate because this is the documents you downloaded from the investor relations of the company. Because I'm researching company from scratch, so I know nothing about the business. I will start asking questions like what company does to understand if the business model is attractive for me or not. Then I would go to see about the business segments of the company, profitability of the every business segment, which is growing fast, which is profitable. Then I would confirm about the risks of the company. And finally, I will ask the question about the future opportunities and future growth potential from the management perspective. Now, let's say you are not interested in the business model of the company, or you believe the industry this company is operating does not have a high potential, or you are not aligned with the strategy of the management where management wants this company to go. In this case, you don't need to continue. You can stop here and save your time and you can move on. But let's say if you like what you see, if you think this business model makes a lot of sense, if you believe there is a high growth potential, if you think that this industry has tailwinds over the long term, then in this case, I will go to financial data aggregator like FinChat to see the past performance, not the stock performance, but the business performance, revenue growth, earnings growth, free cash flow growth, margins, capital allocation, stuff like this. In a step 4, I will go through the financial statements like balance sheet, cash flow statement, income statement, but at this stage I just need a high level understanding. I already understand what company does, about the business model, and now I have the visual representation of the past of this company. Step number 2, company's presentation. In this step, I will go to investor relations page of the company. I will download the company's presentation and I will go through the presentation to see the highlights, how management wants to lead this business to succeed. I will not really use notebooklm or other AI tool to summarize the presentation or stuff like this. I believe that presentation is already quite clean and the management wants to present the most important information they want us to understand. Now, the one thing need to keep in mind is that usually, okay, management wants to put everything good in the presentation and does not have a lot of motivation to put something bad. This one you definitely need to keep in mind. The management is trying to sell his company to investors by writing the company's presentation. But anyhow, the company's presentation is still allow you to understand how management sees the future of this company, and you can continue to see if this vision where the management see the company is going is aligning with your own vision. The step number 3, analysis of financial statements. In this step, I will go to investor relations page for the company and I will download the reports where I can find the income statements, balance sheet, and also free cash flow statement. We already had high level representation of company's financials from data aggregator from step number 1, but now we need to get into details because we're already on a step 3. So far we like what we see, and now we need to find is there any yellow flags. And I would recommend you to put more attention into the footnotes and also into the adjusted numbers, because usually there is a GAAP accounting and also non-GAAP accounting, and in non-GAAP accounting the company will adjust the earnings, and I recommend you to watch at the footnotes to see the details of this adjustment, because sometimes it makes total sense. For example, if this income is for the short term, just for this quarter, and in the future it will not be repeated, this is totally understandable. But sometimes the management is adjusting to make the company financials looks better than it's in reality. The step number 4, competitors analysis. In this step, we need to find the competitors of the company, and the best way to do it is to leverage LLM, ChatGPT, Gemini, Grok, whatever you prefer to use. You can directly ask, okay, I'm researching this company, I would like to find competitors of this company. The LLM will give you a few competitors, hopefully 2 or 3, and then what you do is leveraging the data aggregator like FinChat, for example. You go to check their financials, the big picture of their financials, revenue growth, free cash flow, profitability, margins, balance sheet, estimates from analysts, and stuff like this. After analyzing the competitors and comparing the margins, comparing profitability, growth, future estimates, we can ask a question: what if the competitor company is actually better than the company we are researching? Because this could be totally the case. And in this case, I would recommend you to switch the research to the competitor company and take more closer look to this competitor company. But in another case, if we still like our company and we want to continue, let's move to the step number 5. The step number 5, valuation. In this step, we need to identify if the company is cheap or expensive. There are different ways to value the company: PE multiple, PEG ratio, discounted free cash flow, price to book for banking industry. But I prefer to use the valuation framework where I project the revenue for the next 5 years. I assign the multiple, depends on the multiple I believe working the best for this company. So let's say it could be price to operating cash flow, price to earnings, price to free cash flow, stuff like this. I also will assign the margin which I believe will make sense in 5 years. And I will see what is the potential of this company to be in 5 years. And then I will basically calculate which CAGR, compounded annual growth rate, I can get from this company based on this valuation framework. So far, for me, this valuation framework works the best. It's very simple and allows you to understand very fastly what is the upside potential for this company. The step number 6 is analyzing catalysts, which is moving the price of this company. In this step, I suggest you to open the chart of the company, TradingView, FinViz, Yahoo Finance, Seeking Alpha, whatever software you're using to see the chart of the company. And then I recommend you to pay attention to the large drops, let's say 10% or 15%. Usually the company has this kind of large drops after the earnings, but also sometimes this is happening after some news. So I would recommend to go through this kind of news over the last 1 year or 2 years and analyze which kind of news is moving the company's stock price. And now we are coming to the final step in our research, and this is step number 7, looking for buying opportunities. We open the TradingView, open the chart, see the long-term trend of this chart. Hopefully the long-term trend is up, and then using very simple technical analysis, we will identify where we can start buying this company, where we can enter into the position. Or if based on your valuation framework, if based on your research and all the analysis you did, you have high conviction, you believe that this company is already cheap at these prices, you can directly start buying at current prices. But let's say if you believe that this company is overpriced, because usually good good companies are overpriced because everybody knows they are good, they have high margins, they are working in the industries which is having long-term tailwinds, they have a very high quality management and stuff like this. Everybody sees this, so investors are bidding, which leads to the increase in the multiple, which makes these companies more expensive in the market. So let's say you identify that you want to buy the company 15% lower than it's trading today or 20% lower. You can leverage the TradingView's ability to set alarm. After setting the price alarm in the TradingView, you just wait for the company to reach your price. But make sure that you are keeping up with the company, because every earnings report the situation will change and you need to revisit your thesis, you need to reevaluate your DCF or valuation framework to input the new data. In this case, your price target or the price you want to enter into the position could change, and then you need to update this in TradingView. But anyway, after setting the alarm, you just need to wait for the company to reach the right price. And then when the company reach your price, you will analyze one more time very roughly, is there any fundamental changes, is there any thesis changes which you identify during your research process. And if this is not the case, and this is just the Wall Street being stupid, or the company missed 2 cents of earnings or $30 million in revenue, and the Wall Street is just selling off because of some kind of stuff like this, you can pull the trigger. As a long-term investors, we can take advantage of these Wall Street games. And here you have it. These are the 7 steps I use to research and analyze the company. I hope you enjoyed. If you did, please make sure to smash the like button. I really appreciate your time watching until the very end of the video. Thank you so much, and I will see you in the next one.